today's question comes from Betty. Betty asked, what about taxes? What can I expect to pay in taxes when I sell my business? This is another top question that I get on a regular basis. So quick disclaimer, I'm not an accountant, not a CPA. I'll share what former clients, accounting professionals have shared with them, which they've shared with me. This is not meant to be tax advice, but I'll give you an overview of what you expect, the type of conversation you can expect to have with your accountant. Hypothetical business sells for $1 million. Their book value, I'll come back to that, is $500,000. So you got $1 million sale price, $500,000 book value. The capital gains is what's in between, right? The business went up in value just like a stock between what they put into it and what they sold it for. Book value is basically what your accountant has for your books as far as what's depreciated. You've invested in your business, things have depreciated. We can come back to this number of, on paper, it's worth this. Super simple example. So $500,000 in this theoretical example would be the capital gains exposure from selling this $1 million business. But there's more. Everybody's capital gains rate may be different based on their income bracket. So it kind of depends, business owner. Are you going to sell your business in January and take your $1 million and then make $1 million doing something else? Because now you've got your $500,000 capital gains plus the $1 million and however that's treated on top of each other. Or you may be selling and then just retiring and not making any money. That may affect where you end up, at which tax bracket, which percentage from 10, 20, 30%, whatever that appropriate number is going to be applied to that $500,000. Talk with your accounting professional about your tax bracket. And the last piece of this puzzle, and something that your intermediary should help you with, along with your advisory team, primarily your accountant, is what is the asset allocation? What is the asset allocation? So we sold your $1 million business. Remember, we talked about theoretical $1 million business, book value $500,000. $1 million business, was it all furniture, fixtures, and equipment that was sold? Was it tangible assets? Was it goodwill? Was it the knowledge? Was it the phone number that you sold essentially? These things are taxed differently. So that's why when you say, what's this going to affect? How much is it going to cost me in taxes? It's not a simple answer, but these are the mechanisms that an advisor should walk you through when they're trying to get you to that amount. It is important for you to know. You're going to sell your business for $1 million. You want to know, what are we going to walk away with? You got to pay off your debts. If you've hired an intermediary, which you'll probably get more if you hire an intermediary, your intermediary will be paid at closing. And then it's the year after, the following tax year, when you settle your year, that's when you can expect that tax bill. There will be other fees in selling a business. This is a topic that I cover a lot, but the tax ramifications should be one of the things that you think about when you think about what some call the net. What's really going to go in my pocket after all of this happens? So great question. Thank you for asking. I get that a lot. I hope this was a primer on how to approach the tax considerations when selling a business. If you have questions about selling a business, please ask me, the business broker, Raleigh intermediary, Neal Isaacs. That's what I do. I'm a Raleigh business broker. I'd love to answer your questions. Put them in the comments. Direct message me, because everything we do is confidential. If you have a specific question you don't want in the comments, like, subscribe, share this content. Thank you for watching. Until next time, have a good one.